Okay, hello traders. Welcome to Ice Open FX. I'm Ezra. In this video, I'll be breaking down from our higher time frame outlook to lower time frame outlook to see where price is and what we expect of price. So from this higher time frame, we have a POI just right here, and the market has already used the wick of the candle to clear some buy stops that has been placed around these highs, right around this high and this body. So there's a buy stop. So since market has already cleared that, so market can what give us what a lower prices to trade, place a little bit lower into this current structure range, right? So since we have a current structure range around this area, what what do we expect of price within this area? We expect market now to trade into this range as our current range. So on this weekly time frame, this becomes our current range, and we can see that the order flow is bullish here, and you see how market continue the bullish order flow from here around this area. Last area of mitigation, market came back to that area on daily time frame. Since weekly is bullish, market coming to what daily time frame POI giving a break of structure, then we expect what a bullish continuation on that daily time frame to what continue from that to appear on weekly. The same thing if daily is bullish, so we expect what a buy continuation on H4 to continue the bullish movement. So even if you want to trade on lower time frame, let's say for example 1 hour time frame is bearish, you want to join the trade, you go to M15 structural POI, then wait for what a break of structure or the right time frame for intent, which is on M3 for intent, but for a normal break of structure will be on M15 or on that 1 hour time frame. All right, so you understand that there's a difference between minor break of structure and intent. So that is a major thing you have to understand right there. So now we continue, go to daily time frame. On daily time frame, I had this POI marked from our previous outlook, right? So from previous outlook, I marked that POI. Just right what we are seeing here on this time frame, we see a clear bearish candle right here. So we mark it out. We expect market now to what? To trade lower into this area. On this daily time frame, you see how market is reacting from this POI right here, from this SC candle. So since market is already reacting from that SC candle, giving us a red lower, since higher time frame, which is weekly, is bearish. So we will continue trading this bearish structure until it appears on weekly time frame. So you mark out your POI. If market get to that POI, give you what a rejection and what a break of structure, break high to break the equal high on weekly time frame. But on this time frame, just right as we are seeing it here, we are seeing what a bearish structure. Right here we have a break of structure. Even on my Telegram channel, I said something like this. I said, what good we do in the next coming months, that last week candle closure will determine, and still yet we close below the weekly open, last week open price. We closed below it. So this was a last week open price right here, and market opened around this area. So market closed around this area. So that means we closed below last week open price. Though you can see it right here. It was just a tiny body with bigger or longer wick. All right, so now since the pair has been bullish right here, we're expecting a little bearish movement, and there's a good news. Good data is back, so we'll be using good data to at least support our bias, which is bearish movement on good this week to trade into this area. If there's a reaction, we'll look forward, little pullback into this area, take a sell, then more reaction, at least midweek reversal, at least maybe Wednesday after the sell that we expect maybe today. We can see what a bullish Tuesday, if possible, to create the high of the week. Or market can do it inversely, create the low of the week at this area, we sell, create low of the week around this area, then trade higher. So those are the two things I'm expecting. So that is that on that probability, right? So you should understand that. Then you trade accordingly to the direction of price. So which is what the bearish movement. All right. So that is that right here. So let's look at the good data on gold. So coming here, we see the net position on both the gold itself and USD itself. So the segment we have here is that what on gold they are adding long position, right? They're adding long position. Then on USD they are taking profit on the long position, the net position. Then the sentiment, like overall, adding long position. That means gold is bullish based on weekly view, weekly and daily view. So if gold is bullish, then we can expect market at least to run higher. But based on technical analysis, we're expecting gold to run bearish. So this week that we are now, the good data will determine our next week movement, and it will give us what a great idea, since for a very long time they have not updated this platform. All right, so the segment is that they are adding to long position. So because of that, you mark out your bullish structure points, the discount area where you will be willing to take a buy to the upside. Also mark out the bearish area, the premium area where you will be willing to take a sell, which we are expecting. So though the segment is expecting a long movement on gold, but our technical analysis is telling us that we are expecting a bearish move. So since we are expecting a bearish and bullish move, you can take a clean hedge trade on both of the market. You can take a sell, you hedge the sell, market get to your buy zone, you hedge the buy instantly. So any of them that gives you after a break of structure, then you can move your stop loss to break even. It's as simple as that. Even if I decide to give maybe start giving signal, it's the same thing that we do. So when I have two areas, let's say for example I'm not too confident in my bias, it's either I leave that pair at the moment then focus on another pair, or I will take a hedge trade on those two stocks. So if I will try make sure that at least I get the right entry on both side of the market. So if I'm taking a buy, at least I'll catch it at a good discount level. If I'm taking the sell, I will take it at the good premium level. So when I catch both, as market move away from me, at least I will close almost, sometimes I do close 50, 70, even 80% of my trade. Once it give me up to like 1:5, 1:10, that's it. So once I have that, I'm okay for that very day, if not for that very week. So that is that. Good luck, good trading. So watch out for our next outlook on on GU and on USD JPY. So we update it within a week. So good luck, good trading.